Most people think investing begins the moment they buy their first asset. But for most, it ends there. Not with a loss, not with a crash, but with hesitation. A quiet pause that stretches into weeks, then months, then years. They don't lose money. They lose time. And by the time they finally enter the market, the advantage they needed is already gone. This is the part nobody talks about. The real failure doesn't happen inside the market. It happens before you ever touch it. Right now, more people than ever are aware of investing. They know about stocks, they've heard of compounding, and they understand the idea of long-term growth. On the surface, this should create a generation of successful investors. But something strange is happening. Access has increased, information is everywhere, tools are simpler than ever, and yet results haven't improved the way you'd expect. People still feel late, still uncertain, still stuck. Not because they lack knowledge, but because they are trapped in a loop that looks productive but isn't. They research, they compare, they optimize, they prepare, they wait, and all of it feels responsible. It feels intelligent. It feels like progress. But beneath that surface, something is quietly working against them. Because in investing, delay is not neutral. It's a cost, a hidden one, and it compounds in reverse. To understand this, you have to see investing differently, not as a series of decisions, but as a system with one simple rule. It rewards time more than intelligence. That sounds obvious, almost too simple, but most people don't actually believe it. They say they do, but their behavior tells a different story. Because if time truly mattered more than skill, then starting early would be the priority, not starting perfectly. And yet, most people aim for perfection. They want clarity, certainty, and a sense that they are making the right move. So they wait. They tell themselves they're being careful, but what they're really doing is trying to eliminate uncertainty. And that's where the system breaks. Because the market doesn't remove uncertainty, it runs on it. Think about how people approach their first investment. They don't ask how to stay invested for 20 years. They ask what to buy right now. That single question shifts everything. It turns a long-term system into a short-term decision. And once you're focused on the decision, you start looking for signals. News, trends, opinions. You want confirmation. You want alignment. You want to feel safe. But safety in markets is an illusion. By the time something feels safe, it's usually already priced in. So people keep waiting. For a dip. For clarity. For the right moment. And the market keeps moving. Quietly and indifferently. Without them. This is where the real loss begins. Not with a bad decision, but with no decision at all. Now, imagine two people with the same income, the same opportunities, and the same access to information. One starts investing early, imperfectly but consistently. The other waits. They study more, observe more, and try to understand everything before committing. 5 years pass, then 10. Eventually, they both invest the same way, but their outcomes will never be the same, because the difference is no longer behavior, it's time. One has a decade of compounding behind them, the other doesn't, and that gap cannot be closed by working harder, being smarter, or making better decisions. It's permanent. This is what makes investing different from almost everything else in life. You can't catch up on lost time. Compounding doesn't grow in a straight line. It grows slowly at first, almost invisibly, then it accelerates, and eventually it becomes exponential. Most of the results come at the end of the journey, not the beginning. So when you delay your start, you're not just missing early gains. You're shifting the entire curve forward. You're pushing the most powerful phase of growth further away, sometimes beyond reach. And yet, this is exactly what most people do. They delay, not because they're lazy, but because they're overwhelmed. Modern investing feels complex. There are too many variables: interest rates, inflation, market cycles, global events. The more you learn, the more uncertain everything feels. Simplicity starts to feel suspicious, too easy, too incomplete. So people keep searching for better strategies, better timing, better certainty. Meanwhile, time keeps moving. The real irony is that the system itself is simple. Buy, hold, wait. But simplicity doesn't feel satisfying. It doesn't feel intelligent. So people replace it with complexity, and in doing so, they delay the only thing that matters. Now compare this to how investing is presented online. Fast gains, quick wins, dramatic success stories. It creates the illusion that wealth is built through moments, not time, through decisions, not duration. So people focus on timing. They believe that if they can just enter at the right moment, everything else will fall into place. But the truth is much less exciting. The exact entry point matters far less than staying invested. And staying invested requires something most people struggle with: discomfort. Markets move. They drop. They create doubt. And when you don't have a long-term mindset, every drop feels like a mistake and every rise feels like urgency. So even after starting, people stop, they exit, they reset, they wait again, and the cycle continues. This is where most investors quietly fail. Not in a single moment, but over time. Through small delays, small doubts, and small interruptions that compound into something much larger. Even when people understand all of this, they still struggle to act. Because knowing what to do is not the same as doing it. It's easy to say, start early. It's harder to invest when you feel uncertain. It's easy to say, be patient. It's harder to wait when nothing seems to be happening. So people choose what feels comfortable in the moment. They delay. They adjust. They react. Not because it works, but because it reduces anxiety. And that is the real system. Not just markets, but human behavior interacting with them. A system where the rules are simple, but following them feels unnatural. So the question isn't whether investing works. It does. The math is clear. The history is consistent. The real question is something deeper. In a system where time matters more than intelligence, and patience matters more than action, can you begin without certainty? Can you continue without excitement? And can you stay long enough for something invisible to finally become undeniable? Because this is where the story becomes uncomfortable. Most people believe that once they understand the rules, success becomes inevitable, that knowledge will naturally turn into action. But in reality, there is a gap between knowing and doing, and that gap is where most outcomes are decided. It doesn't feel like failure. It feels like hesitation, small and reasonable delays that slowly stack on top of each other. People tell themselves they will start next month, that they will wait for a better price, or that they need to understand things a little more. Each of these thoughts sounds logical on its own, but over time they form a pattern. And when a pattern repeats long enough, it becomes identity. You don't just delay investing. You become someone who delays, and that shift is much harder to reverse than any financial mistake. There's also a deeper force at play, something most people don't notice at first, and that is the need for control. People want to feel that they are making the right decision, that if they think hard enough or analyze deeply enough, they can avoid mistakes completely. But investing does not reward control in the way people expect. It rewards participation. It rewards showing up consistently and allowing time to work without constant interference. This idea is uncomfortable because it removes the illusion of certainty. It means accepting that you will not always feel confident, that you will not always understand what is happening, and that clarity often comes after the decision, not before it. Instead of accepting this uncertainty, most people try to outsmart it. They search for better strategies, better signals, and better timing. But the more they search, the more complex everything becomes. And complexity creates distance. Distance from action, distance from consistency, and distance from results. What started as an attempt to be careful slowly turns into a habit of inaction. Meanwhile, time continues to move forward, quietly reducing the potential impact of every future decision. Now imagine someone who starts early, not perfectly, but consistently. They do not optimize every move or chase every opportunity. They simply remain in the system. In the beginning, nothing dramatic happens. There are no major breakthroughs, no exciting moments, just slow and almost invisible progress. But over time, something begins to change. The growth becomes noticeable, then meaningful, and eventually undeniable. From the outside, it looks like success happened suddenly, but in reality, it was building the entire time. It was growing quietly while others were still preparing to begin. This creates one of the biggest illusions in investing. People see the outcome but not the timeline. They see the result but not the waiting, and because of that, they try to replicate the visible part without committing to the invisible process that made it possible. This is why many late starters feel frustrated. They follow the same steps, they invest, they stay disciplined, but their results feel slow and underwhelming. What they don't realize is that they are still in the early phase, the phase where progress is supposed to feel slow. It is the phase they tried to skip, and now they are forced to go through it anyway. At this point, many people lose patience, not because the system failed, but because it did not match their expectations. Those expectations were shaped by highlight moments rather than reality. So they change direction, they chase something faster, or they stop completely, resetting the entire process back to the beginning. Eventually, the problem is no longer knowledge. It becomes tolerance. The ability to stay in a system that does not constantly reward you, the ability to continue when nothing exciting is happening, and the ability to trust a process that feels invisible for a long time. In most areas of life, effort leads to quick feedback. You work harder and you see results. You practice a skill and you notice improvement. But investing breaks that pattern. It separates effort from reward, sometimes by years. And that delay creates doubt. It makes people question whether they are doing the right thing, even when they are. So they intervene. They adjust. They interrupt the process, trying to force progress into a shorter time frame. But progress does not speed up just because you want it to. It follows its own pace. The people who succeed are not the ones who found a shortcut, but the ones who accepted the timeline and stayed with it. When you step back and look at the bigger picture, something becomes clear. Most investors do not fail because they lack information. They fail because their behavior does not match the nature of the system. It is a system that is slow, uncertain, and uncomfortable in the short term, which brings everything back to a simple but difficult truth. Failure does not begin with a bad decision or a market crash. It begins with hesitation, with delay, and with the belief that you need to feel ready before you begin. But what if readiness itself is the illusion? What if the system was never meant to feel certain? What if the real advantage does not come from knowing more, but from starting anyway and staying long enough for time to do its work. Because in the end, the biggest risk is not losing money. The biggest risk is standing still while the one thing that truly matters continues moving forward without you.